And we are live on Facebook. Good afternoon, everybody. Andy here with In South Florida. We're here with Mario Quintero from the One Stop Shop as we come to you live every Thursday at the 4 o'clock hour. This is our happy hour, our One Stop Shop happy hour.
Yes, it is.
You're enjoying a nice zero sugar Coca-Cola.
No alcohol.
No alcohol.
Yep.
You got me addicted to your office coffee here. You gave me coffee once and I'm hooked. The office and the coffee and the candies. And the candies on the outside of the door. Incredible. If you ever come to his studio, ask him for a cup of coffee and for some candy at the door. I want to welcome everybody that's tuning in. Welcome, welcome. We have a great show today as we do every single week. And Mario, today we're talking about credit scores and financial literacy. Wow, what a great topic.
It's a great topic, yes.
And this applies to everybody, right?
Everybody.
It's not just kids.
No,
Everybody in general.
everybody.
And how important is it to have great credit?
So, credit runs our economy, and whether you're getting a credit card at a local store, gas station, mortgage, you're buying appliances, you're buying furniture, everything revolves around
It's
credit.
that important.
It's that critical, yes.
Is there a good time to build your credit score?
Today,
Today.
you start today.
Folks, tune in. Let's go. Let's get
If-
the show.
If you're not there yet
Yeah.
with a high credit score
Yeah.
and your financial literacy, today is the day that you can start.
Are you going to teach them?
We're going to talk about different
Yeah.
things that
Yeah.
you can do to improve your credit score and your financial literacy.
Awesome. Folks, this is a great show. If you've heard Mario before and you've seen our show before, you know what great content we have here today. If this is your first time and you want to build your credit or have credit issues or have a son, a daughter, a family member, share this post now. Go down there, right down there, yes, hit share and share it on your network and comment below because, wow, whenever the topic of this week's video is going to be fantastic. Mario, is it ever too late to improve your credit score?
It's never too late. And, the number one thing that you can do to improve your credit score is to pay off your debts on a timely basis
Right.
every single month. And as you do that consistently, your credit score will improve. It's that simple. It's about paying it as quickly as possible before it's due on everything that you got to pay every month, whether it's your mortgage, your car payment, your lease payment, your credit cards, whatever it is. Even if you're just making a minimum payment, make sure that it's done on time.
I was going to ask you that. Does it matter how much you pay?
At least the minimum payment, and hopefully you are able to budget yourself to be able to pay more than the minimum payment to get rid of those high balance credit cards as soon as possible.
So that's the best way to improve your credit.
Yes.
On the other side of the coin, if you miss the payment,
So if you miss payments, that's a no-no. And you want to be able, if it happens, you want to get back on track as quickly as possible. And especially on your mortgage. Mortgage payments being late on your mortgage is like the kiss of death.
interesting.
Okay.
Interesting.
I mean, it really, that is the worst. So you want to make sure that you're on time. You want to make sure that you don't over leverage yourself. Okay. Very important. We live in a society of we want it now,
Yesterday.
yesterday,
Yeah.
and it can't be that way. You have to be disciplined when it comes to luxury items or items that you really want. You need to set a goal to achieve that item when you want it. Not that it's going to make you any happier in life,
Okay.
but it's okay to have nice things or good things, but you got to discipline yourself in order to achieve those things.
It's very, very interesting when you say so not all accounts carry the same weight, but your mortgage is definitely an indicator.
Mortgage and cars
Interesting.
are number one, number two, and then credit cards are number three.
Wow.
But you don't want to be late on any of them.
Of course.
You
of
want to
course.
be on time on everything.
Of course, but with the youth today and our kids, and I'm a father, and you're a dad. A lot of schools don't really teach about credit or financial matters, right? You have kids out there today asking about credit scores, and So, where does credit literacy begin? At what age? And should it be taught at schools, or is that the parent responsibility?
That's definitely a parent responsibility.
Okay.
My parents started teaching me about credit literacy when I worked with my dad in his little bodega up in West New York, New Jersey.
Right.
Okay, and I started working with him at the age of 12, and he would show me how he would pay his creditors, and he was always ahead of schedule, and he always instilled in me the importance of paying people on time. Everybody, you pay them on time because your word and your credit is what you live by. So he started stressing that to me at the age of 12, and when vendors would come in to take an order, before they would start talking about an order, he already had their check in an envelope
From the previous order.
from the previous order to hand it over to them. And when they would leave, he said, "You see what I just did? I paid before I even took the next order." Okay? So he was very credit conscious. My mother was a little more flexible, but he is the one that stressed it. Not that my mom had bad credit.
Right.
She paid on time also, but she wasn't as completely disciplined as he was. And he instilled that in us since we were very, very young.
So Mario, at age 12, you started down this path. We have parents out there watching, I'm sure, and they're wondering, my kid is 5, my kid is 10, 12, 15, I haven't talked to them about credit. I mean, they don't have any credit cards. They have a little piggy bank. I mean, how early should parents out there watching start talking to their kids about this?
So you could use this as a game with your kids.
Interesting.
I started with our daughter when she was about 7 years old.
Wow.
And every time I had an opportunity to buy something on credit, I would bring her with me, or with me and my wife, and I would explain to her the process that we were going through.
Great idea.
Okay, so we would walk into a car dealership and walk out with a new leased car, and I would explain to her what just happened. What happened was we were able to leave that dealership with a brand new car because our credit was good enough to be able to sign and drive.
Wow.
Okay? So that's, everybody leases cars. Everybody goes
Sure.
to the car dealership.
Sure, so very
Bring
popular.
your kids and explain to them the process that you just went through from an early age, and reinforce that every time you do it. We lease cars every 3 years. So from the time our daughter was 7 to the time she went away to college, we went through that process about 5 times. Okay? So she understood that. Another one was when you go to buy appliances. You go to BrandsMart, you go to one of these big box stores, and you order a new refrigerator, a new stove, a new
Okay,
dishwasher,
yeah.
the whole thing, and you sign for it, and you take one of those 24-month no interest plans, okay? And all of a sudden, the appliances show up like 3 days later. Explain to your children what you just did. You walked in, you bought all new appliances for the house. You signed for it. You're going to pay for it over time. You took advantage of no interest monthly payments. And you got to reinforce that the reason you were able to do that for your home was because you have good credit. All right? The children understand that from a very early age.
Right.
So they understand, oh, mom and dad got a car. Mom and dad bought appliances. Mom and dad bought furniture at El Dorado or Rooms to Go. They bought new living room furniture. They got 18 months interest free. Explain that process to your children when they're young and reinforce how important it was for you to get approved because you had very good credit.
Wow, great information and great tips. That should be added to the parenting handbook. It isn't only about, the birds and the bees, you got to talk about money and credit because a lot of kids now, they don't have a clue.
You got to educate them, and you got to educate them about money and credit. So, as a child, they, start having a savings account at the bank under their name, maybe with the parent's name attached, and every time they get some money gifts, You go to the bank with them, you deposit, you show them the statement when it comes in, how the interest grows. You gotta talk to them about these things, and always reinforcing the fact that credit is one of the most important things that they will have. And I'm gonna share with you another story about us and Vanessa, who just turned 25 years old last week, but she has a higher credit score than I do.
Awesome info, folks. Folks, if you're just tuning in, you're in for a great session today. My name is Andy within South Florida. We're here with Mario Quintero from the One Stop Shop, and we come to you every week on Thursdays at the 4 o'clock hour, and we cover all areas of the real estate, the mortgage, financial, credit scores today with Mario. Wealth of information. If you're tuning in with us live and you're watching us now and you find this useful, we would love it if you hit that share button now and share with your network this most important topic. If you're a parent, definitely tune in. In fact, Mario, what's the best number that somebody can reach you at?
So here at the office, our number is 305-598-1600. And after hours, my cell phone is 305-588-0451.
If you're a parent and you haven't discussed this topic with your children, and if you're looking forward to the day when your children purchase their property or they buy a new home, and you haven't covered this topic, listen, you call the One Stop Shop now and you can cover two birds with one stone. Basically, you will learn about talking to your kids about financial literacy, and you're able to educate your kids on the home buyer's market and what's going on with the interest rates, and a wealth of information so that when your kids are ready to purchase that dream home for their family and you become a grandmother or a grandfather, you're able to say, wow, they made the best choice because of the knowledge that I shared with them with credit, financial, and the real estate market. Mm-hmm. Awesome information. Mario, there's a lot of confusion about the FICO score. Is it FICO, FIFO? How do you pronounce that?
We call it FICO.
FICO.
Right.
Everybody repeat after me. It's FICO, the FICO scores. What is the true impact of your FICO score on securing a mortgage?
FICO score is one of the main ingredients to securing a mortgage loan and also getting the best interest rate on that mortgage loan, besides other factors, your income, your down payment. But let's focus on the FICO. You know, there's different levels of FICO scores.
Okay.
And we'll get into the ranges that you need a little later on. But depending on your FICO score will depend the interest rate, and also depending on how much money you're putting down, the type of program that you can qualify for.
Okay.
So yes, the FICO score is very important. It's the measuring stick that the lending industry goes by.
Very important. So out of many ingredients on securing the best mortgage for your future home, FICO is definitely in the mix.
Yes, it is.
What are the worst things that can impact your ability to secure credit?
Mortgage lates on your mortgage, being late on your mortgage. If you are late on your mortgage, let's say 2 months ago, okay, you cannot secure a new mortgage for at least 12 months after that last late payment on your mortgage.
Wow.
So you got a 12-month penalty, okay?
Interesting.
So that is the worst thing that you could do, is be late on your mortgage payments. The other one is bankruptcies. Bankruptcies have a very negative impact on your FICO scores. And the last one is foreclosures. Foreclosures, very bad, even though there's more flexibility today to get you into a new mortgage after a foreclosure. But still, those three things, mortgage lates, bankruptcy, and foreclosure, is like the kiss of death to help you get a residential mortgage.
So when is late? What does late mean? Because a lot of people...
30 days.
Okay, 30 days after your due date is late.
Well, it's 30 days late reported by your lender. So if your lender reports you 1 times 30, that's late for 1 whole month. Okay. So it depends what shows up on your credit report and how your mortgage lender reports you. if you think you're gonna have an issue with getting your payment there on time, you may as well call the lender, make some kind of arrangement, say, listen, I'm a little short this month, I'm gonna send you this much now, and I can pay you over the phone, and before the next 2 weeks, I'm gonna pay you the rest. Keep the lines of communications open in order to avoid a mortgage late reporter on your credit.
Excellent advice. With the holiday season coming up, I know a lot of people struggle. You know, you have multiple kids, you have challenges, you know, with jobs, and always this fourth quarter is a very expensive time. Sometimes people may fall behind. So in your experience, you find that it's always better to communicate with the lender and just kind of like, hey, listen, you know, this is what it is that we are.
Keep the lines of communications open all the time, and let them know when you're gonna make that payment.
Wow. Awesome information. Folks, you can't buy this stuff. You can't buy this knowledge. You can't buy this information. Mario, how do you feel about being a co-signer, and when is it a good idea?
I don't like the idea.
Wow.
Of being a co-signer.
Wow.
So,
I wasn't expecting that one.
being a co-signer, you're inheriting the responsibility of that family member, that great friend, whoever
Your
it
daughter,
is.
your son.
Right, you're inheriting that debt.
Okay.
If it's their responsibility to make the payment, the only way I would consider doing it is they have to pay me, and I'm gonna make the payment. Cause I'm assured of getting the payment, and I'm assured of making the payment to the creditor, so it doesn't affect my credit negatively.
As a co-signer, it does affect your credit.
Sure it does. Sure it does.
You're on the hook.
You're on the hook. So if they're late, you're late.
Wow.
Very negative, and I've seen a lot of situations where people try to help their children.
Of course.
With a car.
Of course.
With multiple things.
Happens all the time.
The kids don't follow up.
Of course.
It looks bad. It affects the parent's credit. So the one area where and this is where we helped our daughter to build her credit. Okay? What we did was each year we would take out a student loan for the year under her name with us as the co-signer, knowing that we would be able to pay it off over the next 12 months. So she was getting credit for the credit that was being built under her name,
Excellent.
and we were responsible in making the payments, but we were literally building her credit by being a co-signer.
Smart.
And we knew that she would have no responsibility in paying that off because that was the arrangement that we had. So if you want to build your children's credit on a student loan, that would be a good opportunity.
Smart.
To be a co-signer, and you just got to budget yourself that you're going to pay that off over the next 12 months. And then when the 12 months is up, you get a new one, and you start it again. And for 4 years, you get a student loan, you pay it off.
Smart formula.
Our daughter's credit is over 800.
Smart formula.
And she's been able to retain her credit score today, now that she's totally independent, she works, she lives on her own, to be able to continue having a great credit score and paying her debts on time, because we started that when she was 7 years old.
So you mentioned about getting a student loan every year. Is it better to get to credit the loan for a shorter time, pay it, and get another one, or to maybe just get a loan for 4 or 5 years?
Well, the way they work is you got to apply for them each year.
Okay. In that particular case.
You have to apply for them every year.
Okay.
For that school year. The way we did it, the bank pays the school directly,
Right.
and then we would get a statement, and
That's a great tip for parents.
so
for parents that are
that's how
watching.
we did it. And by the time she graduated, the 4th year was done.
So if somebody wanted to improve their credit, is it best to take, let's say for example, let's forget the issue with the school, and you have to do it every year. Is it best to get a loan for, let's say, a year and pay it off, and then get another, so in a period of 2 years, you have 2 loans opened and closed? Or better to get a loan, let's say, for 4 years, and to do payments on that one individual loan?
My personal opinion, again, and somebody else may differ, is to get one loan each year, pay it off,
Right.
and this way
To show history.
You got 4 loans
History, right.
over a 4-year period of time that were paid off,
As opposed to a loan.
as opposed to one loan.
Okay.
And student loans usually work from year to year anyway. They're all different types, there are all different banks out there, there's all different ways to get it. We used one of the national banks to get the loan, and every year we did the same thing, and by the time the next year was due, the goal was to have it paid off before we went for the next
So
one.
it's planned out. Planned out.
You have to plan.
You have to plan. You have to plan. You have to plan. That's great, great information, folks. By the way, if it's the first time watching, my name is Andy within South Florida. We're here with Mario Quintero from the One Stop Shop. We come to you live every single week on Thursdays at the 4 o'clock hour. We talk about topics relating to the real estate market, buying, selling, the mortgage market. We do these videos consistently. If you've never seen me, never seen Mario, check out marioshomenews.com, marioshomenews.com, and you will find a wealth of information there about the One Stop Shop. You will find many videos, including this one for today that we're going to load there pretty soon. You're going to find testimonials, referrals. This guy is the one-stop shop for a reason, and if you want to know more, you got to check out his site. And if what you've been hearing so far is interesting to you and you find it useful, if you want to help somebody in your network, go ahead and hit that share button on this video and make somebody smile, because they're going to have great, great credit scores. Mario, again, what's the best number to get a hold of you at?
So here in the office is 305-598-1600. After hours, 305-588-0451. I just want to mention something. I see comments and questions coming up. We will respond to all of those at the end of the video.
Mario is very responsive, folks. Drop your comment below and we will definitely get with you. So Mario, I have to ask, because it's everywhere. You see it everywhere. You see it on TV. You see it on Facebook. You see it everywhere. Call me and I'll fix your credit. Call me and I'll fix your credit. How do you feel about credit repair specialists?
So I think there's some good ones out there, and then there's others that don't have a
Okay,
clue.
so it's buyer beware.
It's buyer beware. So we've had one credit repair specialist that we've used since 2010.
Wow.
And we recently picked up a new one that we filmed a video today that we're going to play on Monday as one of our referral partner spotlights. And we like to give 2 numbers to our clients that require those services. And the reason for that is, depending on the severity of their situation, they may need one versus another. Okay, so we feel good about credit repair specialists, and they have a place in the process. Some of them are very good at what they do. They work not only with mortgage brokers, but they work with banks.
Okay.
And you know, the 2 people that we use, one of them is Chris Colston with Second Chance Credit, and the other one is Andy Gonzalez with First Integrity, which we did a video with this morning. So they're 2 very good people, and you know, if you need their numbers, give us a call.
For those that are watching and say, you know, I should really start on that road fixing my credit. I don't have 800 FICO score. Don't worry, neither do I. What can they expect of an average cost? I mean, is this something that you can expand on? It depends.
It depends. I really can't quote,
Okay.
because it depends on the severity of their issues.
Okay.
You know, sometimes it's just a matter of a consultation of what adjustments the client needs to make, from another being raising their credit score from 500 to over 620.
Okay.
Another one could be charge-offs that they have that need to be removed from the credit report. Others could be, you know, prior foreclosures and bankruptcies and how that's affecting their credit score. So based on the severity of the report,
Right.
they're going to be priced differently.
Because that's another thing we'll hear. Sometimes there's errors in your credit file. There's information that doesn't belong there, expired.
And a credit repair specialist
And a credit
can help
repair,
you.
yeah,
They
yeah.
can help
Especially
you.
with the amount of fraud today, you're getting phone calls from the IRS and from here and from there, and your file has been compromised. You know, I learned a while ago that at least every year you should check your file to be sure there's no accounts there that are not yours and somebody's using your ID.
Right. Some of those ID protection services, I know
good.
we've had Legal Shield for a long time.
Okay.
You have the other one, which is something lock that you see on
Right.
TV.
Right.
Those services are good to have because they basically advise you quickly if somebody's tampering with your information.
Listen, we're living in a world of technology. We're living in a very, very fast world that everything happens in a split second. We're coming to you live from Mario's Home News studio right now. A couple of years ago, this would be impossible.
Right.
You know, and the same goes for your personal credit history, right? So people can forge your credit cards. If you've lost your purse, your wallet, whatever, you may be at risk. It's well worth a while contacting Mario and having your credit checked by one of these credit specialists before you embark on this road to buying, because that will limit turbulences down the road.
Big time.
Big turbulences.
Big time.
If you've never heard turbulences before, it's the first time that you hear the word turbulences. No, I'm not a pilot, and Mario's not a pilot, but well, he is a pilot in the real estate world. You want to check out marioshomenews.com and search for the video on turbulences. Grab a cup of coffee and watch that video, because you're going to leave with your mouth open. And if you're thinking of buying a property, you want to definitely look at that video, turbulences. Then you want to call Mario and be sure that your path to home ownership is clear to close.
I
Right?
do have a quick little turbulence that happened. the day
Oh,
before.
never fails, never fails.
So we were getting ready to close yesterday on a purchase that
Right.
I posted up yesterday.
Right?
But on Monday, the seller gets a call from the title company. Now, we're 2 days away from closing.
Almost there.
We're almost there.
The home stretch.
The loan documents are being prepared. The buyer has the funds wired to the title company.
You're there.
And all of a sudden, the seller calls, the title company calls the seller and tells them you owe Miami-Dade County $400 for 2 liens on 2 of your dogs that passed away a while ago.
Wow.
The guy says, what do you mean I owe the county $400? He goes, if you don't pay this off, we can't close. So the guy got a little irritated, and he was like, well, I don't care, I won't close. Like,
For $400?
for $400. So it got a little bit hot and heavy. Fortunately, we didn't have to get involved. Fortunately, the realtor that represented him and his wife was the mother-in-law, the mother of his wife. And she got involved, and she just told him, if you don't want to pay it, and you know you're not going to screw this up now, I'll pay it from my commission, and you go take care of it, but we'll hold enough money in escrow to cover this and any other thing, so you can close, the buyers can move in, and you go take care of this thing with your dogs. So the turbulence can come from
Anywhere.
anywhere. A day, 2 days before closing.
That was a dog day afternoon, right?
Dog day, a couple of days.
Just dog day a couple of days. Almost a deal, almost fell apart. Well, Mario, so we talked about credit scores, talked about FICO, a lot of information here, folks. Unfortunately, we don't have time to cover it all, so we want to encourage you to contact Mario. And Mario, how much do you charge to talk to somebody on the phone?
We don't charge anything for consultations, so...
So you can tell somebody the importance of credit, how to take care of it, how to fix it so they can be ready to be on a path to home ownership, and you won't charge a dime?
Yeah, we don't charge
Wow.
a dime. We're pretty open with our advice and our consultations.
Awesome.
We just don't like to be used.
Yes, of course. Who does, right? Who does? Mario, everybody wants to know, what are the credit score breakpoints to secure a residential mortgage? It's fourth quarter, you want to get into your dream home, you want to put up that Christmas tree, you want to celebrate Christmas in your brand new home with the new home keys on top of your kitchen island. What is your credit score? What do they need?
So the standard credit score for an FHA loan is between 580 and 619, even though there are some programs out there that will go down to 500 to 550 for FHA, but they require a little bit of more down payment. So standard FHA, 580 to 619.
580.
Okay. Your conventional loan, 620 to 719,
Okay.
conventional. And then for a jumbo loan, meaning loans that are over 500,000 and up, you need at minimum 720 credit score.
Okay. So the higher the money, the higher your credit score needs to be, the higher the risk, of course.
Right, and then the higher your credit score, depending on the program that you're applying for, the higher your score, the better the interest rate will be based on that bracket.
Mario, if somebody's watching and they're dreaming of their dream home and they just paid a rent check and you know what, it's over. This is a year I'm going to buy. This is a year I'm buying. It's the middle of September. Do they still have time to find a dream property and close and celebrate Christmas, Noche Buena, and New Year's in their new home?
Even Thanksgiving,
Really? They still have time?
they still have time. They have a lot of time.
Okay.
Yes,
Okay.
sir.
So folks, there's no need to keep renting, no need to throw your money away. It is time, it is the year that you're going to celebrate the holidays in your new home. All you do is pick up the phone and call Mario. I mean, the first thing you should do is visit marioshomenews.com, check out the website, get to know Mario. Look, this is just the first video you're watching, right? Maybe you don't know me, you don't know him, maybe you know me, you know him, but you watch us every week and you're like, why am I still renting? Why am I still renting, Mario?
You gotta start somewhere.
There's no need to rent.
And it starts with a phone call.
It starts with a phone call. It's the middle of September, folks. Start before Halloween. No treats, no tricks, or no tricks, all treats, right? Start thinking about getting into your property. It's the best investment that you can really make, and Mario's can definitely make it happen for you. MariosHomeNews.com, the one-stop shop. And what else can we say, man? I mean, you know, you've given them solid gold advice.
It's all about taking action, starting early, never too late to start, to get your credit in gear.
Absolutely. Folks, for those of you watching from our local area in the South Florida market, today is Thursday. Next Thursday, mark your calendar, we have our Greater Business Association luncheon, and we're going to have the one and only Mayor Carlos Jimenez as our speaker. So if you want to meet us, you want to meet Mario, get his autograph, you want to join 80 to 100 local business owners, register at greaterkendall.com, register and join us next Thursday, September 26th at 11:30 a.m. where you can mingle with 80 to 100 local business owners, meet Mayor Carlos Jimenez, and hear what's happening in our community in South Florida.
We also have the business breakfast coming up on Tuesday.
The business breakfast.
Which is becoming a very successful
Yes.
networking event.
Yes.
You can go to the greaterkendall.com website
Mhm.
and sign up for both the breakfast and the luncheon next week. And you can mingle and network with a lot of the local business owners.
For those of you early risers, you know, breakfast is great, the luncheon is great, we do a networker, and all these events you attend can help you stop renting and help you get on the path to home ownership, because you're going to meet people like Mario, people like me, and a lot of business owners, and your business is going to grow, and you won't have to continue to rent, and you could call Mario to get you into a home.
Andy, it's been a pleasure again.
As always, my friend.
Thanks for your help.
We're going to talk to him next week, or we're going to keep him in suspense?
We'll keep it in suspense.
You got to come back. You got to come back Thursday. Check it out.
See you next week. Have a wonderful week.
Thank you, folks.
Thank you.